Today, we're going to talk about a topic that we get all the time. We get a lot of inquiries on FHA loans and the different types of FHA loans. So today I thought I'd cover every single FHA loan out there for you. Hello, this is David Xie with the Xie Mortgage Team. So you know what your options are when getting an FHA loan, because it's not just going to be your standard FHA loan. There's a lot of different ways that we can look at it. And let's talk about it here on this video. We'll just talk about the standard FHA loan. What is a standard FHA loan and who's it good for? So number one, FHA loans are going to be 3.5% down typically. There are down payment assistance options out there offered by a lot of different investors, and we can get you in with less money than 3.5% down, and the seller can pay up to 6% closing cost on all of these loans. So a standard FHA loan would be for a lower credit score borrower who doesn't have a lot for down payment and wants to just make sure that you get the better qualification or a higher debt to income ratio. The second type of FHA loan that we have that is available on the market is FHA Refinance Loans. What is a refinance? You're currently in a loan right now, whether it be FHA, conventional, VA, or USDA, and you just want to maybe tap into the equity and use some of the equity in your house that you've gained the last couple years to either pay off some debt or maybe take out the money for a home improvement, add on to the house, or just to do a non-cash out refinance and lowering the interest rate. So this is for homeowners who may not have enough equity or a high enough credit score to qualify for a conventional refinance, which could eliminate their mortgage insurance. So FHA gives us an option to do that, and especially with the reduced mortgage insurance that's going to be effective now, it's definitely something that, if you're paying the higher mortgage insurance premium, and let's just say that your interest rate is over 6%, this should be something that you may want to start looking into. Another option for a refinance is for FHA borrowers who currently have an FHA loan. And this is definitely something that's more in consideration now than ever before. Like new people that are buying houses now, there is a very big benefit of getting a FHA loan. So if we see someone coming in the door that maybe has the higher debt to income ratio right off the bat, whether their scores are lower or higher, this makes it a lot easier when the rates do drop, especially in a more, in an economy that we're facing right now that's a little more uncertain. FHA loans are really good. So what is a streamline refinance? We take your FHA loan and we refinance it into a new FHA loan, follow all the FHA guidelines, and we're not going to have to do income verification or even valuation of the property in order to do a rate reduction streamline refinance. You've got to have net tangible benefits. So it's got to be some sort of benefit to you, whether it's lowering the term, getting you out of an adjustable rate or an interest only type program into a fixed loan, or lowering your monthly payment. So the streamline definitely has to have some sort of net tangible benefit. The next thing would be the FHA Cash-Out Refinance. This is really important. This is for homeowners that want to tap into their equity to pay off those debts or to meet other financial goals. So let's just say you only owe $200,000 on the house, and your house is now valued at $500,000. That means you have $200,000 worth of equity that you can utilize to pay off debts or make the home improvements or cover any type of financial needs that you may have. In this situation, the way that I came up with the $400,000 is 80% cash out. Okay, 80% of the value of the home. So if the home is valued at $500,000, 80% would be $400,000. Then we have a really exciting program, and I love this program. So we've all heard about people that have bought homes, flipped them, and made a profit off of it, right? So this is going to be a loan that you could do it yourself. And that's called the FHA 203K. So we have the acquisition cost of the house, which is the typical sales price of the house. And we're going to actually roll in the cost of the home repairs into one loan. So what that means is you're going to go out and you're going to meet all the criteria and guidelines. You're going to shop for your contractor if you are over $35,000 in repairs. You're going to have to get a HUD inspector to go inspect it to tell you what's needed to make it like minimally FHA approvable. And then we apply for a loan for the purchase of the house plus the repair cost on top and a 10% contingency. So we do a $500,000 or a $300,000 purchase, $50,000 in repairs, a 10% contingency for $5,000. So $355,000 would be your total loan amount plus the mortgage insurance premium And that's what we would try to apply for and get an appraisal based on the completed condition and value of the home. The next thing we have may not have heard of in this way is a HECM, HECM. What that means is a home equity conversion mortgage loan. That is going to be used by seniors, okay? This is a reverse mortgage, and basically they are going to want to convert their equity to income or a credit line or a lump sum or some sort of combination of all three, and that's also known as a reverse mortgage. So in a forward mortgage, every single month when you're making that payment, the balance is going to come down. With a HECM or a reverse mortgage, every single month you're not making a payment and the balance is going to incrementally go up. However, with it going up, it may sound scary. However, we have to look at it, right? Let's look at the values of homes in the last 20 years or 30 years or 50 years or 60 years, however long we've been tracking the home value prices, right? And to see home values go from, basically continuing to go up, okay? Yes, your balance is going up every single month, but hopefully the values are continuing to go up with it. So that equity level that's maintained, and there's a formula and a calculation used for that, will still be maintained in the value of the property as long as it's held for a long period of time, or however you think the housing market is, right? So a reverse mortgage is a really great option. And I've talked about it in the past with my mother. Like, it's getting to the point where she needs to start enjoying her life, right? Like, I don't care about any inheritances or anything like that. All I want her to do is to enjoy her life. Don't worry about a housing payment and don't worry about anything else, because the long and the short of it is there's an inheritance. The inheritance is going to go to her heirs, right? And I think I'm one of the heirs, but I still want her to be able to enjoy her life and not have to worry about a mortgage payment, or to be able to take advantage of the equity that she's accumulated in her house. Next thing would be the FHA Energy Efficient Mortgage. This is a great program, right? This is a program that, you as a home buyer or a homeowner, you may want to add the cost of like doing some upgrades that are going to be energy efficient or green to your home. And you just can't afford that cost, right? This is a program where you get an energy audit. And basically from there, they'll determine what can be done to make your house more energy efficient or green. So if you have any questions or concerns about any of the FHA loan products that we've talked about, we do offer every one of these products and I'd love to help you out. My name is David Xie with the Xie Mortgage Team, and I can be reached at 757-478-8493, and I will talk to you later.